For Crosscheck Media and Biz Talk Today TV. Welcome everyone to the Money Path. I am your host, Todd Schoenberger. And joining me today is Michael Monaghan. He is the founder of Founders ETFs. He's also a partner. Michael, welcome to the Money Path. I know this is your first time being here. I got to ask though, Founders ETFs, you're actually tracking companies and investing in founder-led companies. It's a genius approach because I don't believe it's ever been done before. But how did you come up with the idea?
Well, Todd, we're really glad to be here with you and your viewers. So thanks for asking. So how we came up with the idea, my partner and I were in DC January of last year visiting the Smithsonian Institute, and a good friend had said, check out the Fort McHenry flag. So we went to see the flag. I encourage everyone to go see it. And it's a great part of American history. It was flown over Baltimore during the War of 1812s. The Brits were shelling. And the fort didn't fall, and it inspired Francis Scott Key to write the Star-Spangled Banner. And we had a real spiritual moment thinking about all this. And we walked through the museum and looked at additional exhibits and said, wait a minute, the people that built America, they're iconoclasts. These were a different breed of people. What if we invested a public market portfolio of only iconoclasts? Founders are iconoclasts, and that spurred the idea to do a year's worth of research to see if that would really be efficacious. And that's what our research found, was that founders on average outperform board hired CEOs. We obviously have all of our own internal data. If people want to look externally, Bain and company's done a fantastic study that shows that S&P 500 companies from 1990 to 2014, led by a founder, outperformed the broader S&P by 3x. So that inspired us to build the portfolio. We're very excited about it.
I'm born and raised in Baltimore, so anytime you reference Baltimore, I'm always going to say you're a winner. So that's awesome. So I have to ask though, why do you think a founder-led company is going to outperform its peers?
Yeah, so we can talk about the attributes of founders and then dig in a little bit. We think that founders, they set a vision, they execute relentlessly, they're charismatic, they're able to lead a group of people to meet a mission-driven goal. Typically, they're mission-driven. And often they've got the moral authority to pivot if need be. So let's use two high-profile examples. We use Mark at Meta. Remember when he was building out the metaverse, he spent billions of dollars. Wall Street was upset. One day he walked in, he said, guys, we're not doing that. We pivoted, they went a whole new direction. A couple weeks ago, I was asked to talk about Elon merging SpaceX and XAI. The reality is I don't think any board hired CEO would have the moral authority to do it, or the trust to have the vision and the execution of why all those pieces are coming together. So we think there's a difference in a founder and also the history of what they've done. If we think about Jensen talks about he's done everything in NVIDIA. And I really believe that every founder has done everything. And it's a piece of institutional knowledge that just isn't captured by a non-founder CEO.
Yeah, I agree with that because they have the passion. They're working this thing 24/7. It's not just a job, it's their entire life. And you actually have to have this obsession about you to get through it. And that's probably why a lot of these companies are successful. So in your ETF, how many positions are there, and are all of them founder-led companies?
Another great question. So we run 100 positions. So it's the Founders 100 ETF. They're all founder-led, every one of them.
Wow.
So what we define a founder as, the person that originally came up with the company, conceptualized it, and is leading it as a chief officer. So CEO, CTO, or CMO, CSO in a medical or scientific company.
Okay. So if that's the case, then do you rebalance every quarter, every month? I mean, I'm sure there's some type of allocation or a weighting scale that you have to focus on, correct?
Yep, really great. We rebalance quarterly. So in fact, we rebalanced this morning. So rebalance and reconstitute once a quarter. It's a modified market cap weighted portfolio. So it's market cap weighted with a 7% top put on any one position. So we said we don't want to get overweight. For example, if we didn't put the positional cap in, NVIDIA would be a 40% position. As much as we love Jensen, we think people want to own a broad market portfolio. So we put a 7% cap and then just shift that capital down into some of the smaller companies, which can be interesting because you have great performance on both ends. The big mega caps perform very well and some of the smaller ones perform very well. And so we trickle some of that additional market capitalization into the bottom of the portfolio.
So if a founder say they retired or they passed away, then they have to be you have to remove them and replace them with another founder led company, I presume.
Absolutely. So when they announce their retirement, we sell the stock. So in the prospectus, it says we have 90 days to do it. I would tell you we're probably going to sell as quickly as practically possible because the data shows that there's an immediate effect on stock price performance once the founder steps aside. And to be clear, that's stepping aside from the executive suite. They can remain as chairman, and it doesn't have the same efficacy as being in the executive position leading the company.
So a company like or an ETF like this, I mean, it seems like a category killer. I mean, do you have any competitors at all out there?
So we hope we hope we kill the category. We hope that it's the innovation leader. You know, we sort of think that over time this is a one-for-one replacement of the triple Qs. You and I probably remember when they launched the NASDAQ 100, it was meant to be this innovation index. Well, over time, NASDAQ has wanted more listings, so they've put up all kinds of non-innovative companies in there. I like to pick on Pepsi and Mondelez. As much as I love a cherry Pepsi, or as much as my nephew and niece love a blue colored Oreo, I don't think anyone views that as innovation. So we do believe we're the category leader in broad market innovation.
Yeah, that is super unique because what's cool about it is that it's something that's right in front of you. Everyone can understand it. Founder led company, and plus you're taking this entire basket and created an investment vehicle out of it. I mean, you didn't have to really come up with any type of big computation or anything. I mean, it's amazing, and definitely applaud you for it. So, give me an idea, or give the audience an idea of the sectors, though. I mean, we had the fellow who started the Inside Ownership Index, and he was telling us that of the Mag 7, 5 are founder led companies. So is tech really that one sector that has most founder led companies, or is it spread across multiple sectors?
I think another important question, Todd, and I think it's something that surprises people as they dig in and look at our portfolio. It is a true broad market index. So, yes, we certainly own a lot of tech stocks, we own a lot of financial stocks, but we own every sector in the S&P 500 except for utilities. And I happen to think with the AI build out and the need for power, I think we'll have a founder-led new utility coming. So I'm excited that one day we'll get to buy a utility and then we'll own every sector in the S&P 500 as well. So I think it's important to emphasize, based on your question, we're not just leaning on technology, we're leaning all across the economy. You know, Waste Connections, for example, is a founder-led company. And so I think, you know, everywhere from, you know, boring businesses like collecting waste to the most exciting like NVIDIA building chips that are trying to outsmart us.
So, have you approached any of these companies that you hold positions in to say, hey, look, we're investing in your company for this reason? I would imagine a founder of a company would really embrace this idea and really try to say, look, let's try to get this ETF into a 401k plan or something where employees can back it as well. Have you gone down that path yet?
So we haven't been quite that fortunate yet, but yeah, we've had a lot of good conversations. I'd say we've probably talked to 30 to 50% of the executives in our portfolio. And so, yes, almost every founder kind of, it resonates with them why a founder-led portfolio makes sense.
Yeah, I mean, because if you're a founder, I mean, I know with cross-check media, I mean, anything that has any type of talk of cross-check media, I mean, I'm all over it. And so I think that's fantastic. I can't imagine if you're running a $4 trillion company like an Nvidia out there, how you would think too. So what about distribution though? Where can people actually invest in founders ETFs?
Yeah, so as you know, one of the great things about ETFs is they trade on an exchange every day, just like a stock. We trade under FFF, and you can find that at your favorite broker, whether that's Charles Schwab, Vanguard, Interactive Brokers. I really think Yannick over at public.com is doing some great and interesting things to help people do long-term investing. We're obviously on Robinhood. I think the Coinbase guys just said they're trading stocks now. So any brokerage firm, you can go on and purchase FFF.
And you just started trading, correct? Just a few months ago?
Yeah, so we have about we started trading December 18th, so we're about a little over 2 months of trading.
Well, it's fantastic then. And I'd imagine, well, are there, I know you're really focused on this one ETF. But do you have any other ideas for unique or innovative ETFs down the line?
Yeah, so we're obviously 100% focused on this. We think it's a core holding. We think that advisors and self-directed investors can make this a core holding in their portfolio. And yes, we have an 11,000 stock database with 30 years of data that's all custom that we had to build ourselves. We can get into that if you want. But where I'm going with that is, yes, there are some other ways we could slice and dice the data to make it interesting. So I would say in the near term, we're 100% focused on this, but later maybe we'll come back on the show, Todd, and talk about things we'll do in the future.
Well, I know we will. We'll definitely do that. Just one last question, though. The one thing that I've noticed is ETFs are constantly adding leverage. Are you opposed to adding leverage to I mean, I think it's a fantastic concept. You probably don't even need it, but will you think about adding leverage down the line?
Certainly not on this product. So we really, to your point, we kind of feel like we're zagging in the ETF industry when others are zigging. We think this is the, build wealth and compound wealth slowly and steadily. And so we think it's just a great way to compound your wealth over very long periods of time. And we think just owning equities on an unlevered basis, if you buy this on a dollar cost average basis every week or every month, we think you're going to wake up very happy deep in the future.
Yeah, no doubt about that. I think this is fantastic. Michael, I got to thank you for joining me today. This was great. We're definitely going to have you back. Got to talk more about this, especially next quarter with so much going on. The markets are selling off today. It's a big day, but looks like your ETF's holding up nicely. So I would think this would be a proper place for a lot of investors. But I want to thank you for coming on the show today.
Great to be here, and we appreciate the fantastic questions.
Thank you. Thank you. So, on behalf of Michael Monaghan, I am Todd Schoenberger. Thank you once again for joining us on the Money Path. Have a wonderful weekend. We'll see you when the calendar turns on Monday. Take care.